Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just want to go over the pump and dump that we've had on the charts. Of course, this is just a neutral kind of pattern. We didn't really have a engulfing candle or anything too significant, at least yet, right? We're just entering this consolidation area where you see a lot of choppiness at the bottom. And a lot of commentators online have tried to point out that this is kind of a triangle like this, some kind of accumulation triangle, and that, maybe it's a good sign even as we work our way up. But, I'm not 100% convinced about that, that we're going to just pop out of this. A lot of commentators, I was watching the YouTubers who always try to push Bitcoin on you. Like no matter what's going on in the world, they try to push you to buy more and more Bitcoin. And it doesn't always make sense. It doesn't always make sense. You don't have to feel pressured by those guys. I mean, they really just, some of them are almost like used car salesmen, and it gets pretty tiring pretty fast. So just trying to do something a little bit different. I mean, one guy was saying, yeah, we popped up to the top of this triangle, and because we're so far along in the triangle, it's highly likely that we're not going to pop down again, right? Well, we popped down again, okay? And there's some obvious reasons why we could do that. First of all, we have these resistance zones. Here's a resistance zone. Here's a resistance zone. Here's a resistance zone, right? So if we talk about the horizontals, there's one pretty much right there. Boom, 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 right? Boom, right there. And even if we zoom in on a smaller time frame, you can see right here. Boom, right there, right? So this one also, you know, uh, interacted with this line, and it was a pretty good idea to just assume that this was going to be a point of resistance as we pumped up here, and that we would at least have a retracement of some sort when we reached that level. And so, of course, in the title of my last video, and then at the end of it, I did mention that, we have to get up here to 45,000, kind of sit on top of these levels to reach the next stage. And, that I recommended to take profit. Recommended to take profit. We were just hanging out in this area. I just recommended to take profit. And I hope that you did because, we had a nice fall here. Now, we did get that pump, which was. This is a neutral pump, okay, guys? This isn't like I know a lot of people are kind of saying like it pumped because the Biden administration made an executive order to, research crypto, and yeah, that's good. I mean, the government is becoming interested in these things, and the regulations that they were suggesting was almost nothing, right? They suggested nothing, in fact. They just want to make reports. I think they're more focused on stable coins. They're worried about stable coins undermining the US dollar in the global financial system. And so they're trying to figure out how to create a digital dollar that can keep stability for the dollar in the global financial system. They're not really focused right now on the tax evaders and all this stuff. Everything that you're worried about, the US government is not really focused on that right now. For at least for the next 180 days, what they're going to be focused on is just what an American stable coin would look like, what an American digital dollar would look like. And so, of course, we can have this pump because it's neutral. Like their position was so neutral, it was almost not even worth talking about. And I'll show you in a minute why we had this pump. It's not because of the executive order, but the executive order being neutral is why we were able to have the pump. In other words, if it had been bad news, we would have just been going sideways, right? Or maybe we would have taken a dip. Because if they said, oh, we're going to have to ban stable coins, and yeah, we're going to go after tax dodgers, really hard, and we're going to look into all their MetaMask accounts and all that stuff, then, we could have taken a dip. But instead, we were able to have this nice pump and reach a take profit point, which, if you took this trade, was pretty profitable, right? A lot of things were pumping yesterday, and if you didn't get that ride, don't worry, don't worry. There'll be other chances. Right now we're in a down market, and we're going to have a lot of these type of little reactions, these little reaction rallies. We made a higher low, and so of course we should expect that we would pop up to the next resistance. Like that should have been expected, right? The neutral news and what was going on in the rest of the market is what let us, get past, like some of these points. We didn't just hang out here. We didn't just chop up. We popped up with a lot of other things in the market. And of course, people took profit because they're seeing, we're in a down market. And so it was time to take profit. And that's what they did. They cashed out, right? They took their profit after worrying all this time that you know, they might not have another chance because who knows what's going to happen next. And so they took their profit off of that kind of neutral to kind of goodish news, combined with the rest of the market pumping in stocks, right? Now, one thing that I did point out, which I think is important, but I'm not sure. I'm not an expert on this stuff, guys. Some things I'm just really learning, and so I don't want to act like, I'm that I have such expertise. I don't want to make it, misleading for you, okay? But a lot of guys are pointing out, as I said, this type of accumulation, triangle, which fine, that might be going on. But on the other hand, we really didn't have enough time on this chart, um, to really, uh, you know, go for a bull run. I mean, if we're thinking about all-time highs and that sort of thing, there seems to be, a lot going on, in the indicators, which would have suggested that we could test back. And the world is still complex. There's still things like the interest rates and all this stuff hanging over our head. So, from my mind, and what I tried to communicate to you, is that we're probably just going to hang back a little bit and that you want to take your profit where you can. And then I also suggested take a look at different time frames. So if you're on the like 4 hour or the 6 hour, or the 1 hour, you're just seeing all this movement, right? But what I suggested in 2 videos ago was that you go on the weekly, because on the weekly, you can see a little bit of a different picture here, where we don't really have that accumulation triangle, but rather we have this type of kind of downward kind of neutral triangle, right? And I wouldn't make too much about this. Just it was just an idea that I was having, right? Look at this. Look at this. Look where we bounced down to. And I told you, I told you this pressure on this candle, that was a weekly candle. This pressure pushed it all the way down and compacted it like this, whereas this one pushed it all the way up, right? So this was kind of a bad sign, and this was kind of a good sign for this later pop-up. And I'm just following this, and I suggested to you guys, look, yeah, we're rallying, and I mentioned this in the previous video, not the previous, but the one before. I mentioned, yeah, we're having a rally, but take your profits where you can, because these wicks, on the weeklies, are indicating to me that we're being jammed into this kind of neutral pattern, which a neutral pattern can keep extending. You can just keep moving these lines like this, right? You don't run out of room. You can just keep moving the lines, okay? And so, we're just in this neutral pattern, kind of hanging out until we see what happens with the war. We see what happens with the U.S. Federal Reserve. One thing we got out of the way is the executive order. We didn't know what the U.S. executive order on cryptocurrency was going to be. We've been hearing about it for a couple months that it was planned. And now that we see it, okay, it's neutral. So we're just in that neutral pattern, right? And so we're just going to be in this neutral pattern hanging out. We've still got 3 days left on the week. We haven't busted out of it yet. We've had wicks before, but we haven't busted out anywhere. And we're talking about these macro patterns. We really should be looking at the weekly. Go ahead and put our EMAs on. You see, we're just hanging out here, chilling above the 89. I pointed this out like 3 videos ago. We're just chilling above the 89. I didn't expect us to go anywhere because we have all this pressure. Like we're getting rejected, 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 constantly rejected from this possible squeeze play to the upside. And, if we ever do get accepted into this zone and start closing candles, between this 9 and this 21 EMA, then, there's the possibility that we can do something like this. Do, 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 pop. Okay, something like that. And it's going to take time. It's not, it's going to take a few weeks. It's not just going to happen like in one day, right? So here we did have this type of pop, right? But this was also a totally different macro setup, okay? So we possibly have a couple weeks left to go before we really have some decision on here. And one of the things that I would point out is that here we very quickly were above the 50, okay? This blue 50 line. But here we're below it. And that's kind of what's rejecting us just as much as this 21, right? So here, we were rejected, 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 but we got squeezed in between this and the 50, and we were accepted by the 50. The 50 said, okay, you can ride on top of me. Like the 50 was always saying you could ride on top of me. It just broke down temporarily. Just it attempted to see what the 89 was going to say, but the 50 said, nah, I'm going to keep giving you a ride, right? But here the 50 is saying, no, no, no. I said no. No, stop asking, right? So the 50 is like saying, get the hell away from me, right? And because the 50 is saying, get the hell away from me, we can't get into this kind of squeeze play between this yellow and the red one, which would pop us up the way that we got right here, and then popped us up, right? So that's why you're seeing all these wicks and why I recommended to you like 3 episodes ago to take a look at the weekly and keep following that. And part of the pressure on the weekly is this monthly, right? The monthly is just threatening us with the squeeze play to the downside. See here, you see the yellows on the bottom, whereas on the weekly, it's on the top, right? So if we can get in between these guys, then it'll pop towards the direction of the 20, the yellow, right? If we can get like a positive curve on it. But in this case, we have a curve that's threatening to like curve down. Same with this one, and we're in between them. And which way does it pop? Towards the yellow, right? Well, which direction is the yellow looking at? Well, right now it's just neutral. That's what I've been telling you. It's neutral. That's why I said watch that weekly, because we want to see which way this neutral pattern is going to break eventually. And what the monthly is threatening to do, the monthly is threatening to squeeze us down this way. Boom, 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 pop. And then that would bring us to around $25,000. Okay? So the monthly is threatening us. Like it's not just rejecting us the way that the weekly is. The weekly is just, they don't want to talk to us, right? But the monthly is actually saying, I'm going to smack you. You keep trying, I'm going to smack you. I'm going to smack you down, right? And that's why when we look at the daily, and we get super enthusiastic, or people are looking at the 4 hour and they're getting super, oh, we're mooning, we're mooning. Look at this, look at this. We've got this squeeze up. We've got this squeeze up. And I'm saying, no, guys, take your profit. Take your profit, take your profit, take your profit. Take your profit where you can, because the weekly isn't having it. The weekly is saying, nah, no, no, no. Down, 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 down. Squeeze, 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 squeeze. Just neutral, very neutral. Not decided yet. And the monthly is saying, hell no, hell no. Why is the monthly different than back here? Well, look how sharply upward this 20 was pointed in the last summer. In the last summer, the 20 was pointed way up. I use the 21, but I'll just call it the 20. The 20 was pointed way up, right? It said, okay, if the 10 lets you down, I'm gonna give you a ride up, right? But now the 20 is saying, getting kind of tired, getting kind of tired of supporting this relationship. I think I'm gonna possibly drop you off soon to the 50 on the monthly, and the 50 on the monthly is 25,000. So you can take these trades on the weekly and below, but just be very cognizant of what's going on the monthly and our relationship to it, because the monthly isn't having it. The monthly wants to smack us down. The weekly is just thinking about it. It's kind of the gatekeeper. And these other time frames lower than that, they're just going to play with your emotions. They're just going to mess with your head, okay? Now, the daily is the guy who can kind of like turn things around, or probably, like the 2 day or 3 day, they can kind of like change the mind of the weekly, right? Just depending how we can curl up some of these EMAs. Because, if you look at even the 3 day, let's see the 5 day. 5 day, 5 day is kind of just in the middle here. But if you look at the 3 day, it's being supported by the 200. And then, of course, the problem is that, under the 3 day, you're riding under the 200. These are orange and white lines. These are the 200s. And when you're underneath it, it's not great, okay? You see, you got rejected there at the 200. See exactly where we got rejected? At the 200, right? Look, it precisely to the 200 and then pop down, right? Pop down. And you see my weekly trend, like it's weird. We're just bouncing, right there. So this thing, it has to make up its mind. It has to decide to pop up. It has to start curling up, and we have to wait for these kind of dailies to figure it out what they want to do. Are they going to romance the weekly and get the weekly to change its mind, or are they going to just you know keep fooling around and just eventually, just like this and this, make a wick, too low, that then gets all the other time frames to start curling the wrong way. So right now, previously I was saying I didn't want to see us like a closing, I mean wicking, or I just didn't want to see us in this area of like 33,000. But 35,000 was kind of nice, if we could get like a 35,500, just a wick there, just to grab some cheap coins. But you really don't want to close below 35,000. And now, as time goes on, this kind of like rises a little bit higher. You don't want to close below these areas. Now that it's kind of a low, you probably want to stay above 37,000 as much as you can, because the more you dip down in these areas, the more you're going to just help things curl down, and you don't want them to curl down, right? Like this is, if you get below this, if you get below this number of 37,000, you're going to start pushing this 20 down. As long as you're up above 37,000, this 20 can keep curling up and you can keep riding the magical ride. But if you're dipping below 37,000, like you're pushing it down. Like this number is an average, so it will start bending down. And so that's where these numbers are coming from. I'm not just like pulling them out of my ass, right? Like a 37,000, you really don't want to, close below that. And the more you wick below it, the more dangerous it is. On the other hand, this 10, right? It moves much quicker, so it responds to the chart much closer to the candle. And so if you go up and down, it just moves with it, right? So it's not as big of a deal, right? You can have a move, but this one is much slower to change, and so especially on the monthly, right? So you don't want to bend it too much. So pretty much we're kind of like on the lookout for that kind of 35 to $37,000 area. We really don't want to be closing candles there. And also, we're trying to get accepted into this, what is it now? $40,000 to $44,000 area, which is what I said before, right? I wanted to see us get 42 to 44,000, and preferably, what I said is 45,000. Like if we can sit on top of 45,000, then we're probably going to have a squeeze play to the upside, right? On these lower time frames. And unfortunately, we were rejected down, and I'm going to show you why. I'm just going to spend the rest of this video just showing you why that happened, because some of you might be confused. You might not be looking at, you might not be looking at these things. But if you take a look at stocks, for example, which man, I really gotta complain to TradingView. They keep resetting my chart, and it's very annoying. Take off the change. Let's see. Get rid of the logo. Okay, there we go. There we go. Now I can read this stuff without it being all crowded. Okay, so let's take a look. What happened? Why were we able to pump yesterday? Well, the Biden news, the executive order was neutral, so that allowed us to just move freely, whichever direction the market wanted to go. Like it wasn't going to get in our way. That's the key point. And it's also one piece of uncertainty that's now out of the way for the next 180 days. That's the length of the executive order, that it demands some reports by the end of 180 days. And then they're going to start taking some small actions. So you can expect probably they're not going to do anything for another year. You can pretty much expect it, right? But anyway, we have 180 days at least. And so, hey, that's one thing that was uncertain in the market that's out of the way. But the big reason why crypto popped yesterday is because the stock market popped. Remember, I said like whenever these things are kind of red, then that's good for the market, and these things are green, that's good for the market. When these things are green up here, that's bad for the market, and when these things are red down here, that's bad for the market, right? So, we have this volatility. It went way down. Went way down. Whenever volatility goes down, stocks feel a little bit more comfortable because they're supposed to be, long-term investments, stocks, right? And because, when volatility is very high, they have to keep looking at their stocks, and they don't like that. If they have to keep looking at their stocks, it becomes a job. It's not stocks, it's a job, right? So they want volatility to come down in order for investing to be good. And volatility came down. We saw we were reaching those like high, super high levels, and which was just terrifying for the stock market. And then it came down again. We didn't break under this critical line. It's funny how we're just kind of sitting on it. I marked it off a couple weeks ago for you guys, but we're just sitting on it, and we keep coming back to it. We can't seem to get under it. And so that just tells you that the world is that volatile right now. And we have the potential to reach these ultra scary levels, which could crash crypto. Because when the stock market becomes volatile and unstable, crypto crashes. Okay? That's just how it works. Just how it works. Crypto is basically like a super volatile stock. And so you add extra volatility to it, you're going to see crashes. And let's see. So we also have other volatility indexes. I'm not going to go over them all. They all pretty much had the same. They all like lowered a little bit. And gold came down. People took profit off of their gold. So of course they're putting that profit into more risky assets, kind of like Bitcoin, right? So somebody made money on gold, they put a little bit into Bitcoin. Does that mean that we can't go back up? No, it just means they're probably going to try to test some levels down here again. Maybe around here, like a 1950 or around here, there's a wick, in this area. Maybe, anyway, somewhere around here, 1920 to 1950. Come down here, maybe try again. This chart doesn't look bearish to me, so, it's doing something. It doesn't look like it's about to come down. Is there a double top here? Maybe, I don't know. But, it doesn't look, terrible, right? It doesn't look terrible. So it's going to probably just be choppy. We're going to be able to watch it. It's not going to, this chart is measured in years, okay? So it's just going to come down slowly. But it did pop up quite nicely. So whatever gold does, people are taking some profits off of it, and maybe they're putting a little bit back into crypto. The Nasdaq caught again like a little bit of support, but does this chart look super great to you? Right? Like it doesn't look that great. On the daily, you're underneath the 200s, you're underneath the 50s. On the weekly, you're threatening to break down from the 89, and what do you have below that? The 200s? I mean, come on. Like this is not a great area to be in, right? Like you see this. See how when it breaks down, when it breaks below the 89, what comes next? The 200, right? It was able to catch itself here. Maybe we'll do that. But look how far it wicked down, almost to the 200. So this is going to be the crash. If this thing comes down, this is going to be the crash that takes us with it. Okay? If the Nasdaq comes down, crypto's going to go with it. And I already showed you what those levels are on Bitcoin. And what that means for the rest of the market is a lot lower prices. Okay? So we have these kind of support areas in here, it's kind of like last resort supports, and we're using them. And we got a little bit of bounce. You can see this wick pushed up, got us up here a couple ahead of a couple of these little supports that we've been making on the Nasdaq, and so that's why crypto was able to bounce. Okay, we just recovered some stuff, and I'll show you that more explicitly on. Let's look at some European stocks. You see how this all works together. The European stocks came down to the 200 on the weekly. It broke down even further, and I was saying, "Oh my God, the poor Germans, right? Poor Germans, like when they get hit, they get hit, you know?" And so that's what's happening. That's what's happening. But it found ground on top of the 200 again. And because of that, the rest of stocks are kind of rallying, right? The rest of stocks are kind of rallying. Like, oh, phew, like we're not falling. We're not falling all the way down. Phew, we caught ourselves, right? And then you can see also Tesla, which was dropping down, threatening to go down to its 200, also caught a little support on this kind of European rally. And, again, the Nasdaq. Japan hit the 200. What am I telling you? Like, guys, everything is hitting their 200s. All right. You really think Bitcoin's going to be immune from it? I don't know. It might be. It might be. But all these charts at different times are hitting their 200s. And I'm just saying, like, this world is going through a big financial correction right now. And you can't even call it a correction. A correction is like 10%, right? Correction is 10% according to, financial analyst. It's 10%. What is this? Woo, 20%. You know what you call 20%? A bear market, right? Call it a bear market. 20% is a bear market. We're in a bear market, guys. Okay? And all of these charts are doing it. All of these charts are doing it. They're pushing past their 10% corrections and they're in bear market territory. So, do you really think Bitcoin's going to escape a bear market territory when it's even more volatile than stocks? I don't know. Watch this space, okay? Because these guys are taking the hit and they're taking it on the chin. They're taking it on the chin so they can absorb it and get back to business. But, crypto is kind of dragging its feet. How much is Tesla down? Tesla, boop, it went all the way. Wow, wow, wow. It went 43% down. Holy moly. How much did it go up? 20%. Okay. Tesla's being traded like like an altcoin, all right? Tesla is an altcoin, guys. So, you know, tra trade Tesla while you're trading Luna, I guess. Let's see. What do we got for Apple? Apple, similar. Well, yeah, but Apple has a lot of support that it builds for itself as it moves along. So of course we can count for these kind of bounces and stuff. But it's not in the greatest of places either. It's doing okay. It's doing okay. I mean, Apple is just its own world, right? Yeah, yeah. These are small business kind of things. The Russell 2000. It's not looking hot. Not looking hot. Underneath the 89. Underneath the 89. Where can it go from here to its 200, right? I mean, this doesn't look like it got a bounce, guys. It got a bounce. And this is probably in stocks, this is probably the closest thing that you can consider to Bitcoin, just because this is more volatile, it's more risky. It's kind of small business stuff compared to those big mega corporations. And it got a nice bounce. It saved itself basically from falling to hell. But does this look like it wants to like fully recover? This thing looks like it's struggling, right? This is what you call a relief rally. It's a relief rally. Came up to the 89. It's getting possibly rejected again. We'll find out, you know, the rest of this week. We'll find out what's going on. And yeah, a little bit of a bounce there. This is a pathetic bounce, right? I mean, it's good for them, but the Korean, Kospi, a little bit of a bounce. Korea Composite, right? Stock price, Kospi. But this doesn't look like a recovery. This isn't what a recovery looks like. This is what a relief rally looks like. And this is barely a relief because it didn't absorb anything, right? A real relief rally might look like this, something like that. This is just kind of a reaction, right? A reaction rally. And so, of course, Bitcoin is just going to have a little baby bounce. Nobody should have expected it to just fly away. We look at these stocks on the daily and the weekly, and we can see why I'm drawing this type of wedge and why I'm not drawing the accumulation wedges that other guys are drawing, right? They're all trying to tell you that, we're going to moon. They're all trying to sell you something. We're accumulating and we're walking up and we're just going to fly off. It is possible that we go sideways long enough and we get on top of these EMAs one by one and we have a pop and have a relief rally also, right? Maybe to 50K, maybe to whatever, right? Maybe even we could get to an all-time high. There is such a thing as being in a bear market and making an all-time high. Okay, it is possible. And of course, Bitcoin has done interesting things in the past, but is it likely? Is it more likely? I don't know. That's why I'm saying we're in a neutral pattern. We're in a neutral pattern. And we're just paying attention to it, paying attention to how we hold in these areas. And let me get my triangle back. Okay, there we go. Let's go ahead and put the 5-day on and check to see how our tar pit is doing. Yep, still at the bottom of the tar pit. Look at that. What I tell you, you just get stuck to the bottom, right? You get stuck to the bottom. And our candle still, has that opening that's below. And we got pushed way down here. This would be a nice area to start popping down if this pressure just gets to be too big, you know. Just pop down a little bit. Just get lower and lower and lower. Pop down. Yeah, there's nice reaction rallies. Nice one here, nice one here. Getting worse, getting worse, getting worse. Boom. Nice reaction rally. A little worse, a little worse, a little worse. Boom. All right. Just pay attention to that. I'm not saying that will happen. I already showed you the possibility that we could get, a squeeze play to the upside. There's some saving grace possible, but we're just paying attention to this. We're not listening to the salesmen on the YouTubes. We're not listening to the influencers trying to push you into this or that position. We're just trading the ranges, right? I showed you where those resistances were. And I'm not even getting fancy with the diagonals and stuff, okay? I'm just using one horizontal, right? Just to keep it simple because these are the critical times. I'm moving more towards my EMAs and the horizontals just to keep it simple. It's fun to use all of the confusing theory and all that stuff, when we're just in kind of like a holding pattern. But when you get towards, the end of it, when you start consolidating this much into a tense pattern, it's time to be getting a little bit serious about your positions and having your plan ready. So you got to have your plan ready. And, we can look to see what, for example, Grayscale's doing. Grayscale, on their 5-day, they've already broken down from their quicksand. Probably not long enough chart to make this really valid, but, 3-day doesn't look good. I mean, none of these look good on Grayscale. So, yeah, maybe this is valid, Does anything look good on that? Nope. Nothing. Okay, poor Grayscale. That's the Bitcoin Trust. And once again, we reset the fractal. We started to follow the pattern and it broke down. So just like here, it was following the pattern. We had an old pattern. All right. Let me change the color of this one. There we go. Yeah, we had this kind of a pattern. We're just following to see what could be possible, right? What could be possible? And I don't know how it got over there, but it was originally positioned something like this. We watched it like move in the same way, this whole movement. And that represented, a nice, almost a nice month of movement just following the fractal. But then it broke down when Russia attacked the nuclear power station. And when Russia attacked the nuclear power station, I don't know, the smart money just said, you know what, we're out. And they're just retesting this type of midline. Still seem to be out. Not really getting back on board with the typical way that they trade. Okay? Could be something new. Could be something new going on. But we just don't know. We just don't know. You can have this type of movement and then push up, just like this kind of movement, push up, and then you can go down deeper. You can have a nice pump and then go down deeper, right? Like the RSI, mm, we're still in that bearish control zone, right? On 3-day, 5-day, weekly. Not enough chart here. Yeah, not enough chart. But yeah, even on the weekly, we're still in that bearish control zone. And so, it's hard to say. It's hard to say. But if we start building some, kind of bullish, divergences while we're in that bear zone, then maybe we have the chance to pop up. But right now, just kind of playing it by ear. Got my weird fractals for the CME. Just double checking CME on the 5-day. CME looks a lot like this in reverse, right? Just more squarish. Hmm. Yeah, still hard rejections on the weekly. Hmm. Yeah, looks very dangerous. What was our monthly momentum doesn't look great. It could curl up, but it usually takes more time. Looks, like if we're here and that's like similar to this, it takes a couple months. This is the monthly time frame. It could take a couple months to work out and figure out what it wants to do. Weekly can change a bit faster. Weekly says, look, I'm ready to point up. But weekly can also do a double down. See, it can start softening right here. It could start softening and then it could get ugly very quickly again. And you can just go down further. You can even get a little green and then you go down further, right? This is lower than this. Just like here. This is lower than this area and this had a double red. So you could see another red zone, and then you could see like a relief rally, and then you could get like another low zone, and it could take quite some time. This is a yearly, years down here, months and years. And so in some ways, to just get the pain over with would be a blessing because we'd all know where we stand, and then we can start working our way back up. But we don't. We don't know. We don't know. 5-day, kind of flattening out. 3-day, as we know, we've had a bunch of pumps, right? So we've been having daily pumps and stuff, just ups and downs, just ups and downs. But overall, I think this 5-day chart pretty much says it all. The 5-day chart just says, I'm not sure. I'm not sure. Monthly says no. Any of these lower time frames could say yes. The 5-day just isn't really sure. And a lot of professionals operate off of the 5-day. Total market cap looks pretty ugly. Excluding Bitcoin and Ethereum. This is just the altcoins. The altcoins looking pretty bad. Looking like they want to crash further, right? Still being supported. All of crypto. Oh, not looking great. Yeah, not looking great. Let's see Ethereum. Wow, not looking great. This Ethereum Grayscale Trust actually is quite different. kind of similar. Maybe more similar than the Bitcoin grayscale chart. Oh, come on. But yeah, this doesn't look great. Hmm. Oh, the whole market's pretty much in the same spot, to be honest. Just threatening to get pushed down. And USDT threatening to make all-time highs soon. It's reached that type of limit right here. Here's resistance, resistance, resistance. But it's had small spikes, small spike, big spike, medium spikes, a whole bunch of medium spikes. Are we going to have a huge spike soon? This thing doesn't look like it's turned around. Right? This whenever you see this red one turning around, the worst of it's over. But it hasn't turned around yet. It's just kind of like, looks like it's just kind of like in this position, right? You could see another push up, possibly, possibly. None of these look like they're rounding, right? The worst of it was over when they're all like slightly rounding. None of these are rounding. So people are still getting into their tether. Yeah, maybe they got out of it just temporarily to buy that pump, but they're getting back into it maybe. Right? Yeah, look at this pump. Yeah, look at that pump. We'll see. We'll see. Here it had higher highs. I mean, higher lows and higher high, right? This one higher high, higher lows, but lower high. Maybe some confidence is coming back in the market or some considerations. I don't know. I don't know. Just paying attention to see if it goes higher, if it starts going lower, because it's just at resistance, right? This zone is just resistance, 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 and we're just looking to see how people handle their money. That's all. It does suggest it's getting to be that area where it's a good time to buy, right? Because if tether's this high, then that means that crypto's, low, right? Crypto's the opposite of tether, stable coins. So if tether's in this high resistance and this high zone, then you want to be buying in these areas, right? You want to be buying cryptos in these areas. It does suggest that we're in that shopping zone. Not the worst place to buy. I mean, like this, this is like the worst place to buy because everyone's money is inside of crypto. So why would you want to buy when everyone else has already bought? You're buying the highest prices, right? You want to buy when Tether's up here. It's just right here. You want to buy when it's up here, right? You can see the trend line, right? Something like this, right? You want to buy this area. If we get above this line again, because we've already been there twice, if we get above that line again, kind of you may want to just start shopping a little bit, DCAing in. Even right here is not the worst place to buy. Not financial advice. Okay, guys, that was your alpha for the day. Stay safe and happy trading.